Okay. Thank you so much. The clock is counting, and we have 20 minutes firm, so we'll move it along. So, transition era. Really excited to be here. I'm Brad Levy from Symphony, joined by Commissioner Pham from the CFTC, also Citi prior to that, and Matthew and Jayesh from WEO and OneConnect. So, we talk about a transition era. Eras maybe are important to define a little bit, so we'll try to bound ourselves. If you think 1980 to 2000, 2000 to 20, we'll be focusing on 2020 to 2030 in terms of, how we're going to try to frame this. So, there are multiple transitions taking place between 2020 and 2030. There's catalysts like crypto blowups or pandemics, et cetera. But if we can all agree, I think that we're in this huge transition moment. It does feel a bit slopey and step function up. And I think some would refer this maybe as a new time and a new era. So I'm going to start with Commissioner Pham, who is incredibly insightful on this and one of the better regulators globally that I know. So the main elements that make up this transition, you're a broad regulator, et cetera, et cetera. There's global regulations, local regulations, liquidity across the globe, participants that you regulate, institutions you regulate. So just what is the most important area in this that you think as you do your job and just think about the world right after your disclaimer?
Well, thank you so much for that introduction. It's a pleasure to be here speaking again at Abu Dhabi Finance Week. I will give my standard disclaimer, which is that the views I share today are just those as my own in my official capacity as a commissioner and do not necessarily represent that of the CFTC, any other commissioner, or the US government. So one of the things that you may not realize about the CFTC is that we truly sit at the intersection of the real economy and the financial markets. And in fact, we oversee the largest financial markets in the world, which is the global derivatives market. So anything that you can put a derivative on, whether it's agricultural commodities for food, metals, oil and energy, to interest rates, currencies, and more, these are all things that the CFTC oversees, and we directly regulate the largest banks in the world, as well as the exchanges and clearinghouses. So as I think about us being in this new era of transition, and what's the impact on the global banking system? Clearly new markets and new products, and I'm excited about the fact that technology is an enabler for access to markets and into previously illiquid asset classes as well. Now, derivatives are risk transfer products. And so I think risk transfer markets are going to be critical as we see the transition to the digital economy, when we look at combating serious issues like sustainable finance for the net zero transition. And so I think I will be interested to see what innovations in structuring products might come across. The other thing is that a key shift in these transitions is that it could drive a global first approach to markets, even as other factors drive greater localization for operations and logistics. So regulatory frameworks as a channel for hard power or for soft power is also a strategy that I see as key. And an area to watch is that these transitions are creating a technology-powered solution to the liquidity challenges in funding and other markets that are occurring with more frequency whenever there's market stress or dislocation. So I wonder, will blockchain market infrastructures create the ultimate liquidity aggregator that could address these issues? And finally, if we do not find a solution to the recurrent liquidity risk, I think we will continue to see central bank intervention in markets. And you're going to see where the central banks are going to be not just the lender of last resort, but also the market maker of last resort. So with the challenging macroeconomic and other conditions, the capital and liquidity constraints on banks, examples of failures in asset liability management like the regional US bank stresses, I think that all of this provides a compelling case for an increase in private credit or duration matched credit.
No, really, and dovetails very well with the last panel on the build out of infrastructure with the regulatory overlay, and it's very local but quite global, and I appreciate that point. So Jayesh, at WEO Bank,
yes.
A digital bank, UAE focused, modern, approachable, user friendly, very light, geared towards somebody who's looking to move, fast and easily. What do you think are the things that are driving, that trend for you? What are the most important areas in this transition era?
Yeah, so how many of you like going to a bank branch? Anyone who likes going to the branch? We've got a few, but the rest don't, yep? That is the number one trend, yeah? Consumers are changing, yep? I think what happens in banking is consumers are going to consume services in platforms they want to consume services on, not the ones you force them to go to. So the first biggest change I think is that's going to happen is you will still have banking apps, but consumers will start accessing services on other platforms, like your e-commerce platform, yeah, or your utility platform, or your entertainment platform. So you start seeing banks becoming more of a distributor rather than the sole provider of services. And I think that started and will continue. I think the second big change that happens is, we often design, we spend a lot of time designing an app. I think with AI, that might fundamentally change because currently we tell you the journey you have to follow. I think as artificial intelligence gets smarter, you can define your own journey. Yeah? And I think you start moving towards an era where organizations are truly serving what customers want rather than trying to impose paths and journeys and offers for customers. So to me, there's going to be a huge transition focused on serving customers better.
Thank you for bringing in AI. I didn't think it would happen on this panel, but apparently it does.
Somebody has to.
No, really, and how many people would rather watch a rock concert on TV than go to a rock concert? Exactly. So we'll go to rock concerts and not go to banks. Yeah. It's a great point. I think a lot of those things are going to shift in life. So Matthew, you're, Ping An, if for those of you not familiar, a very meaningful, very large insurance company and does a lot of work in digital banking or banking in general in China. Matthew is in OneConnect, the technology end of that. And as a provider and infrastructure and technology of those businesses, Matthew, with these tools these infrastructures that need to be built out and used, what is your area? And I have a sense that it might be AI related based on our pre-discussions. But you've done a lot in this space. OpenAI is interesting, but not the only thing on the planet, and not even that new. So what do you have to say about the transition and maybe in the AI bucket?
Thanks, Brad. Yes, so for those of you who do not know who is Ping An, not only we have just one of the largest insurance company in the world, we also have a bank which serves 130 million customers in China, so also quite a large bank. And for those of you who actually do not know the so-called DNA of our bank, the predecessor, or rather the Ping An Bank today, is a combine of two banks. When China first decided to the so-called open door policy, when Mr. Deng Xiaoping nominated Shenzhen as a special economic zone, he needed a policy bank to support his vision. One of his visions is turn China into the world factory today. So he needed a bank that supports finance most of the SMEs that involving exporting stuff to the rest of the world, including this part, right? So Shenzhen Development Bank was at a peak, financing more than 80% of SMEs that involved in export and import, mainly export at the time outside of China. The Shenzhen Development Bank is later on, about 12 years ago, acquired by Ping An Group. Underneath the Ping An Group, there was original, quite a tiny little Ping An Bank as well. So the two banks, the original Ping An Bank and SDB, combined into the Ping An Bank today, right? So just a bit of context. We actually, obviously you cannot talk about fintech without mentioning AI these days, right? But we have our own view regarding the so-called Gen AI. We actually started our own large language modeling about the same year as OpenAI. So we actually create our own, we call it Ping An BERT, bidirectional encoder. So we actually view that using the encoder, both from transformers, obviously, using the encoder is probably a lot more prudent in a banking scenario rather than the so-called the decoder, right? So even today with the OpenAI, the newly released Turbo, right? And there's still quite a large percentage that ChatGPT will be bullshitting, right? And then you cannot allow that in a very prudent banking scenario. So what we did over the past 5 years, actually, we pumping through 35 years of banking data through our algorithm. So we train our AI to really understand all the different parts of the bank, all the different products, and so on and so forth. So to give you some stats, 87% of our call center of Ping An Bank. So in China, if you call up Ping An Bank, there's 87% of the chance you're talking to an AI without even realizing that, right? So most of our smart collections within the first week, we're using AI, within the first 7 days of overdue. And we do a lot of AI precision marketing as well. So a lot of that actually we actually found that we have a Ping An GPTs as well. So we use both Ping An GPT and Ping An BERT, both the decoder and encoder to train. But we actually found that the BERT is probably a more prudent way to apply AI. I know Gen very hot, but we have a very different view regarding applying generic AI in a banking scenario. So I'll stop there.
And maybe we can just drill down on the word banking for a moment. I think, Jayesh, banking is a big term.
Yeah.
I come from more of a cap markets investment bank world. You're in the digital bank and more the retail consumer, maybe user up. I know in speaking to Matthew, it's a bit more focused on small, medium business. And so maybe if you guys, Matthew, if you just talk a little bit about, the data that there's banking data, which is transaction data in money. And then there's things that are really being done to get, with that money, which is really what the point is.
Like you, we also have a digital bank. So mainland China, we have Ping An Bank, which is huge. We also, granted one of the first 8 digital banking licenses by Hong Kong MA, by Nielsen, his organization. So our digital bank in Hong Kong, unlike most of digital bank out there, they're focusing on retail. We're trying to focus on SME, which is actually one of initiative by Hong Kong MA. What we did actually, trying to use data as a collateral. So we built we call a trade link that tap into the custom data. I don't know whether you know that in Hong Kong there are about 300,000 SMEs. So 1/3 is focusing on cross-border trade. So basically they buy from China, mainland China, and sell to the rest of the world, including this part, right? So that's our target customer. And we actually realized that, quite a large percentage, 32% to be precise, they never borrowed before from any of the HSBC or Standard Chartered. So their credit history is zero. You run a TransUnion Equifax return with a zero credit. So what we do is we're taking data such as a simple form, like a custom declaration form, that we can suck in, obviously using OCR, AI stuff, right? You message data, it contains so much relevant information because no SME in their right mind is going to order so much from their supplier, right? So a very typical traditional supply chain finance kind of idea, but really messaging data to pump into our alternative credit scoring. I know you're very big on credit, 100%. Credit risk management is really the heart, right, of a bank. That nothing has changed. But with the help of a bit of AI, we can lend to people that never borrowed before without even asking for a financial statement. So far, our NPL ratio for the past 5 years, running in Hong Kong is less than 1%. So, that's really using data.
So maybe, and pulling it back to Commissioner Pham, so you hit right up front on the point that a lot of these technologies will increase the ability to provide credit. So more credit, but probably at lower risk over time because it can be managed more seamlessly, more digitally, more data-driven versus I have an opinion on whether somebody's good credit. And it'll be sort of a one truth view of whether something can be paid or is paid. So you made that credit point, the point on small and medium businesses doing actual trade and then needing a bank and currency and trade finance inside of that. How do you see, and obviously as a CFTC commissioner, it's more of a markets view of the world, but you also have a very clear view of energy because of the nature of the Commodities Futures Trading Commission. So how do you link, and you brought blockchain into that, I believe, which, again, I'll use the blockchain word, which isn't brought up as much lately, but it is absolutely part of the fabric of what we're talking about. So if you can just maybe talk a little bit about how you see the expansion of credit based on blockchain, where it's also data-driven. The CME and entities that you are around a lot have a lot of data. I think our view of data in the industry sometimes is market data, which is quite different than the rest of data.
Yeah. So what I think is interesting is a lot of the focus when you look at blockchain technology has been on crypto assets and sort of an alternative asset class and speculation. But I think if you look at what the greater promise of blockchain might be, it's actually an upgrading financial market infrastructure. It's a tech upgrade. It's like moving from paper to electronic to now digital tokens. So what's exciting about that is the fact that it can provide greater access to illiquid asset classes. And so we're just talking about how do you upgrade the traditional financial system? How do you do tokenization of real world assets, whether we're looking at real estate or the financing of real estate, or you're looking at trade finance, like you mentioned, anywhere where you have a very high touch, intensive chain back and forth, a lot of paper, those types of documents, anything with complex operational risk, that's where the blockchain technology could really be an improvement to that. And you mentioned data. So with blockchain technology, it can create an easier way to obtain that data. Let's talk about trading markets, which the CFTC oversees. Right now, the process to obtain trade reporting is so laborious. to get it from a trade repository. There's a lot of issues with data quality and therefore the data utility. And there's issues around the amalgamation of this trade data. But if you consider that you could have a regulatory node on even a permissioned blockchain network, then the regulators can have real-time access to this data and it can improve market surveillance and other oversight functions. So I think, again, if you consider that the real value add or the real promise of blockchain technology might just be in the fact that you're getting better pipes and plumbing, that kind of boring story is actually what I think should be getting more attention for what it means for, again, global markets, a global markets first perspective.
And with about 5 minutes, and I think that we'll come back a little bit to the, are the regulators overseeing pipes and plumbing in markets, or are they actually part of it? My view is in the future, they're part of that. They just have a different role and a persona in that. So just to talk a little bit about the, this era that we're in 23, 25 is around the corner, 2030 is not too far away. Guys, from your perspective, just the next couple of years as a digital bank building here, what do you think is that tangible future state that's not too far out in the sort of 1 to 2 year, horizon?
Yeah, I think, look, for us, the next few years help expand the pool of banking. Yeah, there still remains some underserved segments, whether it's credit or anything else. I think that expands with both the banking apps we deliver or embedded finance. Yeah, so now you start seeing a lot more happening with blockchain and some of the other capabilities. I think the fundamental shift is you have more confidence. Whether it's as a consumer, you get insights to make the right decisions. Yeah, so you have more confidence in managing your money, or whether as an institution, you have more confidence in the stuff you're doing, because now it's either on blockchain or it's real-time data, or you can mash up a lot of data to manage risk. Yeah, so I think the next 2 years, you start seeing a lot of confidence building on both sides. Yeah, which helps the whole revenue pool of financial services grow.
Yeah, so trust has come up a lot, and trust of tech, trust of data, trust of process, and we have a lot of work to do, but the data is accelerating, the transactions are accelerating. We'll have no choice but to build more trusted systems. Matthew, we spoke a bit earlier about being incremental, people, maybe long vision, but smaller things that make a difference in the near term. What are you thinking about there in terms of, what of a meaningful project you could work on in the next 6 to 18 months?
I mean, you hit the nail on the head, right? You mentioned trust, right? So there is one beautiful technology, blockchain, which is zero trust design, right? So we actually found the application of blockchain in cross-border supply chain finance. Because we obviously have been unbanked, we built the largest SME lending platform in China, but also with our digital bank in Hong Kong, we use data as a collateral, right? Using trade data as a collateral. By the way, we also built an SME lending platform for ADGM. That's why I got invited to speak on this stage. So what I'm trying to do is actually connecting this SME platform, because I think this is actually one of the Chinese government's initiative trying to foster the so-called cross-border data sharing, right? So trade is very important, under the Belt and Road Initiative. So what I'm trying to do is building up what I call a digital trade corridor, starting from connecting Hong Kong MA, what we did with Hong Kong MA and ADGM. So we're connecting.
And maybe just a simple tokenizing of an accounts receivable versus trying to tokenize the whole blockchain through to the iron ore.
Yeah, so unlike the assets-backed security, which is obviously called subprime. So what we want to use is using blockchain tokenized accounts receivable on that digital trade corridor, which obviously deal with the trust issue. That's really what we're doing.
Yeah. Commissioner, we can close off with you. What do you think is in that near term from your perspective and maybe beyond, and how regulators and the markets will, what's the action in the next year or two?
So what I appreciate about some of the discussion today is talking about two key shifts that people are seeing with all of the technology that is available. So one of them is around the fact that you're having just an explosion in new markets and new products for financial services. I mean, really sort of innovation is your creativity is the limit, your imagination is the limit. Another one, though, is how with technologies like blockchain, you're really seeing instantaneous financial transactions. And instantaneous financial transactions means, yes, everything is faster, everything is real time, but also means that transmission of risks is also real time. And that's something that we saw with social media and, again, the US regional bank stresses earlier this year. So what I see is two key trends to expect from regulators. So first of all, just as my colleague said up here, risk management has to be at the core of your business. When you think about a universal commercial bank in both wholesale and retail markets, I think there's two main jobs. One, risk management. Two, support the economy through credit creation. Those are the core functions of a bank. And so with that understanding, regulators are going to have heightened regulatory expectations and much more supervisory scrutiny over new markets and new products. And then the second trend that I see for regulators is really looking at how do regulators step up their game? How do regulators stay ahead of the curve? How do regulators really upskill from a talent perspective? How do you compete with the private sector when you're looking at these issues? And I also think that with the shift broadly in our lives to a digital economy and virtual worlds, regulators are going to be more focused on technology service providers, whether that's traditionally through third-party risk management by financial intermediaries, or whether it's even direct regulation.
We look forward to working you as a provider. Thank you, ladies and gentlemen. Thank you to my panel, Commissioner Pham, Jayesh, and Matthew.
Thank you.